I've talked to many founders over the past few years, and they've told me repeatedly that the number one thing they need from Washington is regulatory clarity. They just want to know what the rules of the road are so they can abide by them.
That was White House crypto czar David Sachs at a news conference yesterday. During President Trump's first week back in office, he issued a goal of proposing a regulatory framework for the operation of digital assets in the United States. Joining us right now on the future of crypto in the U.S., as well as AI, is Steve Jang. He is Kindred Ventures founder and managing partner. And Steve, what can you tell us so far about what you've seen from this new administration, what you like, and if there's anything that you think that you'd like to see more of?
Well, one thing you have to give them, and good to see you, Becky. Thanks for having me back on. Well, one thing that you have to give them is that they're fast. They're rolling these out in a matter of days. These proclamations and a lot of the EOs that you're seeing. I think one of the things that we're looking forward to with David Sachs in the administration as the AI crypto czar is that the low-hanging fruit, Bitcoin, stable coins, smart contract platforms, all of that, regulatory uncertainty will be settled down. I think it's been a shame that crypto projects have been offshoring outside of the U.S. to avoid regulation and a lot of the consternation that comes from it. I think a few of the things that sit on the outskirts of that, we'll have to see. I think the SEC and the administration still want to be protective over consumer investors, and so we'll see, I think, a steady balance there. But we're seeing Bitcoin, stablecoins, Ethereum, Solana, smart contract platforms that already have a lot of global adoption and a lot of industry adoption. I think those will get a little bit of the red carpet now.
It sounds like the dust still needs to settle in terms of the regulatory changes that are going to take place. But we have seen Bitcoin and other crypto move pretty aggressively ahead of this, anticipating that this relaxation and maybe standardization of regulations would come. Has all of the gain already been built into this, and now we wait and see? Or how would you anticipate? Have companies come back to the United States yet?
Yeah, I think, I think on the buildup, there were a lot of gains and prices across the board. So I think the market is in sort of a standstill, waiting to see what actually happens concretely. So I think you're seeing that, right? I think, from a prediction perspective, understanding, not only David's background, but where everything is with ETFs and the adoption that we see from firms like BlackRock and Vanguard and other large investment firms and houses, is that, I think there are a few things that are going to happen in 2025, to start to happen in 2025 and then continue through this administration. I think the biggest one will be that securities will be tokenized. I think that that's been a long-standing concept that has had starts and stops. But I think things like stocks, bonds, real estate will actually start to get tokenized as digital assets during this administration. And that's a huge sea change to how things work today and the legitimacy and credibility of digital assets and crypto. I think stocks and bonds and real estate going on chain is probably the biggest thing that we see at Kindred happening in this administration.
Let's talk AI and the changes not only from this administration, but maybe more substantially the changes that we have just post DeepSeek, this latest release. How has that changed things in your world? What have you seen from the companies you deal with?
Well, it's really interesting. There was a rout for about a week and a lot of discussion, not only outside in sort of Wall Street and markets, but in media, but also within the tech industry. And I think there's two schools of thought out there. One is that the speed and efficiency at which DeepSeek was trained has a negative effect on whether or not there'll be continued capital investment in things like NVIDIA chips, GPUs, data infrastructure, compute, all the pre-training inputs that you need that we've seen, many companies raise billions of dollars for. Now, there's another school of thought which says, actually, there's a paradox in economics called Jevons paradox, which says when you make a commodity more efficient, it actually increases aggregate demand of the overall, so it increases the overall size of the pie. And I think that's I believe that school of thought is correct. So what I think is happening right now is that models are commoditizing. They're very important. They're highly valuable to AI, obviously at the core of AI. But I think value is accruing now out towards the application layer, applied AI.